Good morning, everyone. Richard Calhoun, Creekside Realty, 9 o'clock. My contact information is down here highlighted in yellow. To get to the meetings, of course, you put in the green URL, which is my root URL. You add the year 2021 to it to get to the live session. To get to the handouts, you enter the word handout singular and the full 8-digit year, month, date code. So 2021-01-23 for today's handout. The archive presentations are down here. You can get to the whole channel, just the base URL, and you add today's date in the 8-digit code to get to the specific episode. And it takes me a couple hours to get that up. We're looking here at the overbidding. This is the magnitude of overbidding. The redder the color, the more of the overbidding. The bluer the color, the less below 100% the sale price to list price ratio is. And you can see the exact numbers over here. You can see that 100% is no color, 96.5% is solid blue, and 110% is saturated red. Here's the same concept, but looking at the frequency. This is how common overbidding is. So you can see that the Milpitas, East San Jose area is one of the hottest areas, and it's sitting at 77% of the sellers are getting more than their asking price, and it goes saturated red at 75%. You can see South County is down at about 67%, so it's a little less than fully saturated. Foster City is a very small area up here, and it's sitting at about 71%, I think I saw. And of course, right here in the expensive areas in San Mateo County is the only area which is blue in color, and it's sitting at 31%. My no color is at 42.5%. And you might say, wow, that's pretty high. It is, but that's based on what this valley typically does. Even when we've been in the worst recession, 15% of the homes are selling for over asking price. And it's, a combination of sellers are pricing low to get it sold and that kind of thing. This is the most important indicator, in my opinion, days of unsold inventory. It's basically this, it is the supply demand ratio expressed in terms of how long it would take to sell the existing inventory. The redder the color, the hotter the marketplace is. So you can see the only area that's sort of cool is right along the San Mateo, Santa Clara County border. And, normally that might raise my flag a little bit more because that's sort of the epicenter of the real estate market. And it is worth watching. But I think what's going on is people are not willing to pay the premiums for the convenient commute with shelter in place because commute is not as big of a deal. Since days of unsold inventory is the most important indicator, we're going to look at it in all the different micro market areas. And over here on the right-hand side is the recent data. And, if you look at the last couple data points, it's pretty alarming going up like that. Basically, that's the new inventory coming on for this weekend, which is really the first full weekend of the new year, because last weekend was the holiday, Martin Luther King's birthday, and then the first New Year's and all that kind of thing. So this is really when the market's taking on steam. So we have a flood of inventory. There hasn't been the opportunity to buy that inventory yet. So inventory is high relative to the number of sales. This graph has a new vertical line, also purple in color, and I may change it to a different color. But this is to the left of the first purple line is the year 2021, and to the right is 2020. And of course, this second one is when shelter in place was announced. So the reason, and the gold line is the 5-year median, which is 2015 through 19. That's sort of the gold standard. Those were 5 great years. So the fact that the days of unsold inventory, the market is as hot as it normally is, bodes well for the future, the near-term future of the real estate market. The reason we go up here is this is now last year's data. So last year, the market was much slower. Why was the market much slower last year? In my opinion, it was the Super Bowl. That might sound crazy, but when a local team, the 49ers, are in the playoffs, real estate's an optional event and people are doing Super Bowl instead of doing real estate. So now we're looking at the 3 components. These are the 3 major components, actually 2 components. It's the 2 components that go into days of unsold inventory and then rate of sales. So on inventory, I actually have 2 different measures. One is this dark blue line, and that's the total inventory available compared to this 5-year median. So you can see that we're above the 5-year median. We're sitting at about 140% to 150% of the 5-year median. But last year we were at 175, 178% of that 5-year median. So have less inventory this year than we did last year. So now let's look at the number of new listings. This is the new inventory coming in the market. Again, 100% would be right down here on the gold line, the horizontal gold line. But right now we're sitting at somewhere around 140%, call it 130 the first week in January, probably about 145% the second week. And now we're probably back down to about 130, maybe 135 the third week. So we're getting more inventory coming on the marketplace. I also want to make a little disclosure that there's been a fairly significant change in the MLS as much as they try to make it seamless. And it has impacted the data in ways that I wasn't expecting, and I'm not sure I understand it. If anything, and some of the things that I'll get into are very straightforward, but what it appeared to have done is increased inventory in past weeks. And the only way that makes sense to me is agents were holding their listings off the marketplace until this change happened and then putting it on the market. Therefore, they have an old list date. The other thing that is new is the members only. And it may be that when a member only listing comes onto the full public MLS, that it has the member only list date. And so listings are showing up in the past, which shouldn't really be happening. In other words, this last week was starting on the 15th and went through the 22nd. But the week before that, the 8th through the 14th, shouldn't have had any new listings, but it had a significant number of new listings come on now in the current week, which should not happen. I'm going to keep an eye on that, try to understand it a little bit better. And I think it's just a phenomenon that we're dealing with now. And then the second component is the number of offers. This is the number of offers that were accepted in the last 5 weeks, and that's the red line. And you can see the trend is down, but we're still at 160%, 140%, and maybe 138% of what you would expect based on the 5-year median. Now we're looking at total inventory. So here you can see the gold line was down here, and that's the gold standard. The current year, we're sitting at quite a bit above, and if you take the current week right on the purple line, the normal is 1,000 listings. And we have 1,500. So we have 50% more listings on the market right now than we typically do. And the numbers are not, or actually it's bigger than before, because if you come back here to, actually it's just about the same. If you come back here to week number 1, I don't know what you call the number, but just for round numbers, let's call it 800. And you add 50% of that, you're at 1,200, and we were actually 1,250. So, we're running about 50% more inventory right now than we typically do. I haven't looked at it, but if I did look at it in detail, I would assume that is condos and townhouses and potentially San Mateo County. It is not single family homes in Santa Clara County outside of Palo Alto, Los Altos. And then last year, because now we're into 2020, because we've crossed over the first purple line, inventory is quite a bit higher, and then it dropped down. When did it drop down? After the Super Bowl. So that's part of the reason I think it impacts it. It's also every holiday negatively impacts real estate. This year, not so much with shelter in place, and it's because holidays aren't as significant with shelter in place requirements. Now we're looking at the number of new listings. So this is the raw data. So you can see that we had 400 new listings, then 500, and then almost 500, where the normal number of new listings is down here in the 300 to 400 range. This is the number of new offers accepted. And just like we had more listings coming on the market, we had more offers. We normally are somewhere around 300, and we had 400. Now, one of the things to be a little observant of, that's only 33% more inventory, more offers than you would expect. And if we have 50% more inventory coming on the market, and we have only a third more offers going off the marketplace, eventually inventory will build up. I don't think we're there yet, but it is worth paying attention to. Here is the frequency of overbidding. Look at the drop between this year and last year's 1 week later. So last year, we were somewhere around 45% of the sellers were getting overbid. This year, we're at 60%. So clearly, buyers are feeling more pressure to overbid this year in 2021 than they did last year in 2020 prior to shelter in place. And here's the overbidding going for all the different micro market areas, since it's the first indication of what buyers are sensing. And basically, there's no upward pressure on this at all. It's pretty horizontal, potentially even, I would call it horizontal. And the thing you do have to remember is, since you need the sale price to get the list price to sale price to list price ratio, there's about a 5-week delay in getting that data. And then here you can see the change from this year on the left-hand side of the first purple line to the right side of the purple line, which was last year. So this year we are looking at macro data. We're getting somewhere around 104% of the seller's asking price. Last year, we were only at 101%. That's a pretty significant difference. The other thing that's surprising to me looking at the data so much is how much stair stepping there is in this ratio. I would have expected it to be a lot smoother. I suspect it's because we're looking at macro data. So we're looking at condos and townhouses, single family homes in both Santa Clara County and San Mateo County. So the market mix can change and change this number quite a bit. Here is the magnitude in each one of the areas. And if you look at this, again, I would probably say the bulk of the trend is horizontal, but there are a few areas here, this 1, 2, 3 that are significantly down. There's one here that's significantly up, but only after a significant down step. So, there are 3 micro market areas that appear to be getting less overbidding magnitude. Again, a little bit of a warning sign, but you have to look at what they are. Are they condos and townhouses, which I would expect? Then it's not that big of a deal. It's hard to pick it up on this graph. Maybe I'll look at that next week in the Excel spreadsheet where it's easier to tell what area I'm talking about. So now we're looking at the weekly sale price to list price distribution in the different dates. So each line is a different week. The red line is the current week, January 23rd. And obviously this is dated just through midnight last night. I date it today because it's when I gather the data and when I present the data. So all the middle parts here are individual weeks data. The outline, the highest ones here are the best month and the best December. And I have not updated this for January, and I'll probably skip January and start reporting February, hopefully next week, since we're almost into February. So this is the best December ever, and this is the best month ever, April. Here's the individual weeks, and this is the worst month and worst December, because they're both the same, December of 2001. And what it's basically telling you is, as you go up diagonally this way, up and to the right, each line gets better. So the fact that the solid red line, the current week's data, is the highest, says that the buyers in the last week felt that they had to overpay more than any other recent week. Now, what I found interesting was coming over here. See, it's also now on this low side. So what it's also saying is buyers that are finding properties probably that have been on the market for a while, and they're cutting the price down more aggressively than they normally are. So we've definitely had a shift in the marketplace. And it's saying that some sellers haven't recognized that yet, and the buyers are trying to come in and force those sellers to recognize the shift in the market demand. And here's the same data, just a lot of the older data wiped out. So the solid lines in the more recent. So you go back here to just January 2nd. We're only talking 3 weeks ago. It was one of the worst weeks we had out of the last 12, and now we're to the best. And again, this is 5 weeks ago, so you have to go back to January 2nd, and then subtract off 5 weeks. So December's 4. So this is probably right about Thanksgiving when this happened. And that's potentially the negative impact. This is we're coming into the new year, so the market's getting back on strength. This line could continue to probably go up and to the right, would be my expectation. But it's all going to depend on what happens on that ratio between the new inventory and the new number of offers. Is inventory going to grow, or is it going to shrink, or is it going to stay stable? Here's the same thing for the last 12 years. You can see that we're having one of the best years. There's I would call it 3 right here. So up here, this dotted line here is clearly the best, and that looks like it's 2017. And then you have a dotted line, and if I had to guess, it's probably 2012. And then you have a dashed line, which looks like it's 2015. So those 3 years are all tied with 2021 for being the best year. All the others are a little bit worse, not grammatically worse, but a little bit worse. And again, the dotted lines are the oldest. So you got 1, 2, 3, 4 dotted lines, and you have 4 dashed lines, 1, 2, 3, 4. Those are the next oldest lines. And the most current 4 lines are these solid lines, 1, 2, 3, and 4, with the red one being the current line. Here again is the same concept. This is looking at year over year. This is going to be December 1st through January the 4th for most years. So it's not really comparing apples with apples. And then this is the current year to date for January. I should be using January. It's just with the MLS change and everything, I didn't get there. So, we'll restore that in the near future. This is the 10, 50, and 90 percentile pricing. Most people follow the 50 percentile, which is called the median. This just gives you an idea of what's happening with the spread of the pricing. And the color coding is based on the median price. The white colors are basically very close to the median. The dark red are the most expensive areas, and then the blue are the least expensive areas. So then you can actually come over here and pick up the specific numbers for any given area. And what I pointed out last week, and they're not quite as close this week, is look at but they're still close. I mean, there's only $10,000 separating the median price between Redwood City, the Bay Cities, and Foster City, Redwood Shores. And that's closer than they normally are, in my opinion, more from memory versus actually having the data, because that's a nuance that obviously I have not been tracking. Here is actually the raw data for the last 5 weeks. So now you can look at each specific area. You can see that days on sold inventory now in Santa Clara is 34. That is up quite a bit from just a couple of weeks ago. It's because the inventory is just coming on the marketplace. I think we're going to get a lot of sales this week. This is sort of the first real weekend of the new year. This is when prices really jump, and prices have jumped now. The question is whether they will continue to jump, which is what I suspect will happen, or will they plateau and start going down potentially based on it flooding the market with inventory. It's something that I think will become pretty apparent in over the next about 5 weeks. This is the San Mateo County single family home, and you can see San Mateo County single family homes is at 43, so a little bit of a slower marketplace, and it's normally a faster marketplace. And then condo townhouses at 48. So Santa Clara County single family is the fastest marketplace. And with that, I'll bring back up the URLs, do a slight pause to see if there's any questions. And if there's no questions, I'll proceed. Seeing no questions, I'll go forward. This graph really is too much to get into. This is the one that I'll just describe briefly. This is the sale price to list price distribution. And, it's surprising to me to see how much fluctuation there is. This is January 1st, 2016 on the left. This is 2021 here. So you basically have 5 years in here. But I mean, there's so much fluctuation. So what I'm trying to do is pick which line it becomes meaningful for data. And I don't think there is, and this is 1 week data. So I think for something like this, I may have to go back to using 5-week data. And that's the debate I'm having with myself. Here is the 5-week data. It starts on the 1st of the month, and these are the report dates at the top. So this is December, but I reported it out on December the 5th, which means it's data through midnight on the 4th. And if you think about it, December has 31 days, so 4 days in January gives you the 35. Just gives you a quick look at the key points data, which are all highlighted going back over the last 20 years. And here is the micro market data that we're looking at a little bit, where we have 5 slides, 11 metrics, 5 slides, talk about one on each one of them. Here's your key index for days of unsold inventory. And so now you can start seeing Santa Clara County went up a little bit here at the tail end of last year, and then did a jump here. If inventory starts growing more and the offers don't keep up, this will continue to go, which is a slowing marketplace. If the red line levels off and starts going back down again, that means that the offers are keeping pace with the inventory. So that's really key to watch. Look at San Mateo County, though. It's been climbing for quite a bit. And if that continues to climb, it's going to be pretty significant. If you look at it, you're sitting here and not right now because you're actually down here, but just a few days ago, which may have been right at the flood of this weekend's inventory, you were somewhere around 55 days of unsold inventory. At the slowest part of the pandemic shelter in place, you were probably only at 72 days. So, you're not at the same league, and 50 days, 55 days is still pretty acceptable. And in fact, right now, as you've reported the sales for the last week, you're down around 45, very respectable. Anything below 40 is what I consider to be a very strong seller's marketplace. Here is the days of unsold inventory for the 6 San Mateo County areas. And then we're going on to frequency of overbidding in the 3 county areas. So condos and townhouses are starting to dive down. And, diving down for the holidays isn't unusual, and it's hard to see with this, but condos, townhouses tend to be more stable. So this little bit, I think, is the buyers of condos and townhouses really realizing that their market is not the same as single family. And it's hard when 80%, your single family marketplace makes up about 80% of the total marketplace. When it's absolutely on fire, that carries on to about the 20% on the condo townhouse marketplace, but it's really a different marketplace and shouldn't cross over. Again, San Mateo County is slowing down a little bit, which would be the typical end of the year slowdown to some degree. And Santa Clara County is basically flat. And I think the reason Santa Clara County is flat is it should normally be rolling down, but it's on fire because people are moving out of San Mateo County into Santa Clara County for that bigger house because of shelter in place needs. Here is the magnitude of overbidding. And again, San Mateo County is leveled off. Condos, townhouses have been level for the whole duration. Santa Clara County, I would say, is still climbing. I mean, it hasn't leveled off. So the buyers that are trying to buy in this county, buy single family, they're still feeling the real pressure. Here's median days on market, not nearly as sensitive and lags behind days of unsold inventory. So I put it out here just because a lot of people talk about it. Frankly, most people talk about average days on the market, which is a really misnomer. In fact, let's go back up to, if we look at on the market, I'm saying the median days is 31 and the average days is 74. So if you talked about the average days on the market at 74, that's a pretty slow marketplace for Santa Clara County. But now come down here and look at what was offers accepted. The average is 25. That's pretty respectable. The median is 8. So the 8 days is what's selling. So what this is showing you is a lot of the inventory, 50% of the inventory is coming on the marketplace and selling within 8 days. And what that translates into is it's being sold as soon as the seller will look at an offer. So 50% goes as soon as the seller will take an offer. So with 88 days, that's on fire. But if he said 31 or 74, that would be a completely different mindset. So it's really important on what you're talking about, knowing what it is and the significance of it. The difference between average and median. 50%. The median is 50% of the sellers are doing something where the average is overall average. So it's almost a discontinuity. It's just something to be aware of. And that's why it's important to understand, and look at something like South County, average days on market, 103, median days of what's selling, 10. I mean, that's probably the biggest discrepancy right there. That's why they say statisticians can say anything they want to do. It's what data they set. And I try to be pretty careful in use data that is reflecting what's happening the best I can in the marketplace. And you can see in condos and townhouses, it's really dropping off. And what's happening here most likely is, notice how the biggest drop off basically happened with the first of the year. At the end of the year, you have essentially no inventory. And so then when the new inventory comes on in January, it has no time on the marketplace. So it causes the days to drop. Now, it's not dropping in Santa Clara County. Well, it is actually dropping. It's dropped 2 days, but it's not dropping nearly as much because the properties in Santa Clara County have been selling, so they can't drop from a number. It's about as low as it can get. Here's your current inventory. You can see that all of them have turned around and inventory is starting to grow. You can see the big jump up in Santa Clara County inventory. And this is what I'm a little concerned about. It's not happening so much in San Mateo County. It's not happening so much in single family homes. But this is what I noticed when I was doing the data and was referring to earlier, where data from, and I'll throw out numbers that may be close, but it'll give you an order of magnitude. Last week, I reported something like 190 new listings. This week, I go back to check last week's, and normally I get very close to the same 190 number of new listings. Instead, I got 300. So that means like 110 new listings came on for the previous week. That means 110, half the listing agents delayed a full week putting their house on the marketplace. This combines with a time when they've just done a data merge between the Northern California MLSs, 7 of them. I'm not sure that data is real. And I'm not sure why Santa Clara County got impacted the most, but that's what the data is. It caught my attention and I will try to dig into it. This is looking at the number of offers for the past 5 weeks. It's coming down for the holidays. And you have to remember, even though we're here now on the 23rd, if you go back 5 weeks, that's 35 days, you're still involved in Christmas. So once we get back to like February the 5th, and this is outside of Christmas, I'm expecting this ramp up to happen like over here on the left-hand side, which is last year's data. So you can see it came down and the bottom of the market was right about where we are now. And we're right at the part where I'd expect, this is the weekend I'd expect the sales to really kick in. And so this is the trajectory that we're expecting to see over here on the data that isn't here yet. And there's no way to generate future data. I can expect based on what happened last year, but you don't have the data. And then because the closed escrows lag behind by 5 weeks, you can still see that they're slowing down or decreasing in volume. Now we're on to pricing. This is the 10 percentile. It bounces a little bit, but not as much as the 90 percentile, and that's because you're on the low end. So that it's a 10% change on $1 million is a lot less of a number than a 10% change on a $5 million house. And that's the kind of thing that's stabilizing the data here. Here are the three components, pretty flat. Condos, townhouses are going up a little bit here. This, I don't think, is a real data point. I suspect something happened, because San Mateo County is not going to be that much below San Mateo County won't be below Santa Clara County on pricing. I think it's on its way to zero. And I think what happened is my x-axis got shifted by 1 day for San Mateo County. So this line here probably should shift 1 day to the right, was my suspicion. Here we have the different micro market areas. So you can see their prices really aren't going down in any given area. Here you got a blue line that's going up, offset by a brown line going down. That's what I call statistical fluctuation. And it happens. It's what you expect to have happen. You have to look at the broader trends. Now we're moving on to median prices, what everybody follows. This is the 50 percentile pricing. Santa Clara County basically floating right around 1.4, a little bit above, a little bit below, depending on the heat of the marketplace. This tends to be a low point. Look at what happened last year. I will go on record of saying I expect the same thing to happen this year. So we're basically on this slope down to the valley. And I think we're basically not quite at the valley. I think we're probably a week or two away from the valley, because the valley is not going to happen until about February the 4th. So that when you go back 35 days, you're into the new year. And then I expect it to ramp up. So prices have actually gone up right now. So, make sure we get this distinction. Prices are up right now. We just don't have the data. It takes time to ascertain that a house sold, get the listing agent to disclose what that price sold for. If you're doing it globally, like on the MLS here, you have to wait for the escrows to close and be reported at the MLS. The data is just not there. So this is the time of the year when appraisers have a challenge. The market is on fire. Buyers are overbidding for the houses, driving the prices up, but there's no data. And it looks like the buyer's crazy, when in fact the buyer's smart, because a house purchased today above what the data shows the market value is probably going to be a steal 2 or 3 or 4 or 5 weeks from now. Here is the 90 percentile. Now you'll notice there's a lot more fluctuation, and this is because here's $10 million. A 10% change on $10 million is pretty significant compared to a 10% change on $1 million home. And here's the 90 percentile for the counties. And you can see San Mateo County is consistently down. And if you look behind, Santa Clara County is up, which is almost hard to believe because you don't go up towards zero. So here's days in escrow, really a non-starter issue. We're basically at 30 days. Okay, so now we're looking at the map of days of unsold inventory, the most important market metrics, in my opinion. We're going back to December 19th, which is data from December 18th back to December the 12th. So we're looking at data from December the 12th through December the 18th, then going back 5 weeks from that week, and how quickly would the market sell. And the redder the color, the faster the market changes. So each time the slide flicks is going to be a different week. The 26th, the 2nd, the 9th, the 16th, the 23rd. Now, just to see, look at the color now. It's still red, but I call it almost more pink than red. Look at where it was when we started. Look at that difference. Now, what I'm expecting to see happen is, since this is the current date on the 23rd, I expect to see this pinkish color rapidly start becoming redder again. Time will tell. And that concludes the presentation. The green highlight are the root URL. To get to any particular thing, you add what you're looking for. So to get today's handout, you add the word handout and the 8-digit year, month, date code. If you want to get to the seminars, which obviously you know, unless you're watching this for the first time on YouTube, you put in the root URL and add in the year 2021. If you want to get to see the archive presentations, the channel is just the root URL. To get to a specific episode, it's the root URL plus the date code. And with that, I'll pause and see if there's any questions. And if not, I'll see everybody next week. Not seeing any questions, I'll see everybody next week. Thanks for joining. Bye for now.